Hey everybody, what's up? It's Booksy. Today is Thursday, May 30th. I'm going to be talking about AMC stock and I'm going to do a quick update on this chart. I'm not going to be addressing the other stocks that I usually address, so if you're looking for that, you're not going to get it. I might look at GME, but there's not really much to say that I haven't already said in the streams. The reason I wanted to do an update tonight for AMC is because we hit, in after hours, we hit the 786. We went down to 403. And the 786 is at 402, and I believe that's close enough, if not an exact hit, like basically to the penny, to a 786 retracement. So we've moved down from, and I'm talking about a retracement of this move that began on Friday, really Friday, May 10th, and into that Monday, May 13th. The length of that move, the retracement, is a 786 at 403. The reason that's important is because we dropped today from 430, and I mentioned previously that I thought if we hooked around 447 we'd be in some trouble and we'd probably slide down to at least 4. That did happen. I was very optimistic that we may not see 4 just yet, but maybe later on, because we've had what looks to me to be one of those shallow S curves where you're kind of coming down and you're forming an S curve and you're not going to necessarily see the 100%. Now during this time, and I'll show you some smaller time frames, we've had divergent RSI and divergent MACD on up to about the 30-minute, even up to the 1 hour. That's changed after the price action in after hours trading today. That drop down to that 786 level does erase some of the divergences. They're not all gone, and you'll see that on the 30 and 15-minute. There's still a lot of evidence that there's a turn that's about to happen. But I wanted to address a couple other things really quick. Number one, I don't think that, I know Max Payne's at 450 tomorrow. I do think it's possible we could get there by end of day, and it's reasonable to say that given that we know that historically that's happened. You might be inclined to think, well, it's dropped. You know, what's to say we come back over 432? 432 was a historic support, and it is very important. When you go back and you look around March 28th back here, you can see that we previously distributed from this level. It acted as sort of a liquid center in this range back in March. And obviously at this time, coursing through that doesn't exactly bode well for us. But I think, and there's a lot of reasons behind this, I think we're not going to stop at 430. I think we're going to go to 450, and I think actually we're going to move another 50% leg, so kind of a double jump here, up to 481, which is a 62%. This is 618 retrace on this move down. It gives us a very good looking hook kind of action, but there's more to it than that. And I'm not 100% sure about the rest of this, and I'll get to that in a minute. I think it's very possible that this could actually stay quite bullish if it manages to hold kind of high here up above 430. But again, I'll get to that in a second. So when we first came into this run-up, there was a couple things that I talked about. One was, you know, the January run-up and how there's some similarities and then there's some pretty key differences. The other was the March run-up. And the March run-up of 2022 does have a distributive action after it pumps. It comes all the way back down. It ends up doing a distributive action and comes to new lows. We've explored that on stream quite a bit. Those possibilities are still there. But largely, the levels that we're really looking to come back to are not necessarily at new lows. If we were to drop straight down as the crow flies right now, we'd probably get down pretty close, but we'd be more likely to hit, again, as the crow flies here in a straight line. We wouldn't necessarily get to new lows. We get to the creek at like 268. So that's not positive. Like, you don't want to hear that. But I'm willing to bet that at this time, we're probably going to sort of center ourselves again around 450 or maybe $4 going into FOMC, and that we're not going to see the big drop before. I think we're going to see a reactive move. I was looking at this earlier today, and again, I was kind of watching and seeing if I could find the similar area, similar region to what we're experiencing right here. And I wouldn't say I stumbled across this. There's already been analysis that I've done on these we can call them fans coming from the bottom. If you were to use a fib fan here, I think we're dropping those levels. But I noticed that there was a previous spot here, and when you go down to maybe the 15 to 30 minute time frame, it's a little bit easier to see the correlation that I'm drawing. You can see here locally in the current time, the 15 minute, even with that drop in after hours, still has a decent decent divergence on the RSIs. And going into a shallow S curve, that's one of the key things that we noticed. That's what happened on the macro, like the big picture. The gigantic shallow S curve that we got, if you want to call it that, you can call it other things if you want. The gigantic shallow S curve that we got, which runs that full sequence that we always talk about, after the big reverse split drop, that whole thing, right, usually comes paired with almost always, and I'm starting to see this across the market even, it's not just AMC, it almost always comes paired with a divergence in RSI. You just have to make sure that, of course, you're looking at it on an adequate time frame. If it's really small, you don't want to look at it on a 1 hour chart. If it's only, obviously these are multi-day push downs, so you can look at it at 15 minutes, you can look at it up to 4 hours or whatever, but you're going to see more information if it's small, if you're on a smaller chart, and if you're large on a larger chart. I went back and I looked at a previous time where we saw something similar to this, and that was right before the run up in May. Now, I don't want to get you overexcited into thinking that this is probably the same thing and it's going to, do all this stuff. There's some key differences here, one of which is pretty easy to tell, which is that this never really broke beneath the lows during this run up. Neither did the ultimately that LPS here before it took off. Both of them were higher, and this did come below the LPS, but it didn't come below these previous support lines from back here. It's essentially like a retracement down, and then you get an LPS and you move out in advance. There are other places you see this. You can tell right here on the big picture, just glancing at it, you can see this. We call it again like a shallow S curve where it kind of drops suddenly and then has like a rounded hump on it. That's the way I describe it, as it comes down and it has like a shallower bottom. Even here you can see that divergence in the RSI, a mild divergence perhaps in MACD, but we'd have to probably zoom out to see that better. And then especially in these last push downs right here, you can see the same thing prevalent. And in this case, I wouldn't say it's divergent, but it's flat. Down here with the MACD. Specifically, I was looking at that 15 minute to 30 minute time frame, and I was trying to see if there was a simple example where you have maybe a widening or some kind of a big move, and then you get that divergence. And this is actually pretty similar to what we just experienced in terms of, again, the RSI and the MACD. Now, there are obvious differences, but couple things come to mind here. One is that while this doesn't necessarily have a very widening spread, we could argue that it's probably pretty steady. I think on the big picture, it does have a bit of a widening spread as it goes up. I think on the smaller picture, you wouldn't necessarily say that looks like a widening, but you do get that kind of triple top, almost 1, 2, 3, 4, 5, 6 flush motion from top to bottom on the RSI, and also from highs to lows on MACD. You're getting a really big spread here before that occurs, right? And then you're getting a really narrow spread. Same with RSI, same with MACD, before a push up ultimately into that big move. If you look at where we are now, this looks almost like a mirror, like you've kind of worked your way backwards, but there's a key difference. So at first I was thinking this looks a lot like a head and shoulder kind of deal, and I do think in some ways it's like an RSI reset. Interestingly, though, and this is kind of where I'm coming into right now, you can see that if this were mirrored outward, you would say that right here where we are now is essentially the bottom. So it's as if you've kind of returned back to the beginning of this sort of mirroring action. Again, only on RSI, and I'll get to that in a second. Does that really make a lot of sense? But if we're talking about waveforms, that's the simplest way to draw that waveform. And so I would be looking at this like, well, it kind of looks like it's back to its bottom. And interestingly, you see where I'm going with this. This is the area that I'm looking at that I'm like, well, leading up to it's kind of similar. So there's a kind of a reversal action here where you can look backwards in time and say, yeah, there's sort of some symmetry. But then there's also a forward action where you're looking forward in time and how this played into that moment with the very wide RSI spread, and the same thing applies here. Now we could talk about this little distributive action on the top where it pushed up high and then ended up bleeding back down. Now we have something really similar in the same area. I'm not going to go into like crazy fractal analysis on this. I'm not going to go into this thinking that it's exactly the same, because again, this is coming from a downward angle, right? So it would have to be some kind of a, an effort to sort of reaccumulate or something. All right. And at the same time, this makes a lower low here, whereas this does not by comparison to the similar region. So yes, in some ways, are there similarities? Yeah. And I think if you're looking at this particular sell-off as it comes down and how this goes back up along that sell-off, I think there's even more similarities. So if we were to kind of go through and compare this, and I'm not doing it, I'm just telling you, like, this is kind of how I'm looking at it right now as a possible trend, because it might be that we're seeing something very similar, because you're actually moving across, in some ways, you're moving across a trend here. So this motion down, this kind of early shallow S-curve, does give me a lot of the same vibes, even though I know it's very, very steep. It gives me a lot of the same vibes of this early S-curve working in. And if you look at the levels that we return to, again, there's some kind of strong similarities here. I don't think it's one-to-one, and I don't think, again, that you should look at this like it's going to be a straight-up repeat. But I do see this press down and that buyback up, and this press down and that buyback up as fairly similar. Big difference, though, we came down low here, okay? So you need to keep that in mind. It could signal that longer term, this could end up being more of a distributive action, as opposed to, oh, we're going to push up and have an LPS and just go. I think we need to take it with a grain of salt. But again, looking at this kind of shallow S-curve after the widening spread here, after the widened spread on both the RSI and the MACD, you have a divergence that happens as it kind of comes into this localized bottom, right? And then once it does that, you actually get a really clean 62% retracement. A part of me is thinking that that's just like a normal retracement. Why would it matter? But then the thought occurred to me that before I remeasured it, I was thinking of this as a diamond, as a triangle. So I was talking to the Discord group about this as a falling wedge. And it seemed to me that if the falling wedge broke to the upside, and I had it like back here or something like that at the time, if it broke to the upside, and I know you're like, well, it broke down. Bear with me. If it broke to the upside, that you might see, that reactive 618 retracement, which is a very typical retracement move. It's a 62% move usually. That's one of the most common moves that you see. It also happens to typically be about 1-to-1 with the entry point move. So that's what I call like the layman's way, the more basic way of getting a wedge breakout is just to kind of take the original height of the wedge and draw it to whatever that breakout point is, and that roughly gives you the accurate target, right? So this would be broken out down the road when it finally took off, and you wouldn't say this is like a classic wedge. You'd say there's kind of a flattening going on here. But once it broke, you can see it rises up, and it ends up being a 62% retracement, which also ends up lining up typically with some kind of a key marker. And in most of the cases that I've seen lately on AMC, it's been this drop after that distributive action. They create like a hook action. This would have been like the last point, right, on this uptrend. So it's like the rejection point on the uptrend, and then it drops, okay? So if you're catching what I'm throwing at you here, I was looking at this area, and I was thinking, well, it's probably here, right? I think it could be even a little bit lower. I think it could be a little bit lower, but I was looking, meaning like the bottom. It might not be this move, because this move is kind of in the midst of this structure. It may actually be this move here, back down to roughly, it's not a big difference. It's not a huge difference, but it might be that move back down to about 462 up to about 540. When you take this and you apply it forward, and you're going to see that it's not that complicated, because essentially, like, it acts as a target that would generate like a channel, and you can see the two channel lines I've got going down. Interestingly, those two channel lines were the same channel lines I drew in that comparison. When we did the comparison to January, I haven't changed them. So it's set up along that channel. And if you were to look and you were to say, okay, well, where is the 618 retrace? I already did it for you on this move right here, going from the top all the way down to the 786. That retracement is $4.81. When you take this guy and you place it down bottom here, you can see, again, this is an estimation, kind of like the poor man's way of doing it. You can see it's really close, and it wouldn't be all the way to the bottom, it would be to the breakout. So it would essentially be right here, which is where you would just expect it to kind of exit the trend, the downtrend. And so you can see that exit would be probably around 411, 412. This is something that most likely happens in pre-market tomorrow or first thing in the morning if it's going to happen, okay? And it would be right around there, and then it would give you a measured move up to 481. Now, why is that significant? Again, not only is that like a pretty simple to do breakout for a wedge, not only is it giving you the retracement number, but then remember I said that there's usually like kind of a hooking action that happens, and it is indeed right there at 481. That's where we dropped off from. I know we talked a lot about that 485 number like for 2 weeks, but ultimately it was 481 that we dropped from. Very similar to the setup as we saw it over here, where you have that reactive move after the shallow S-curve. In and of itself, that might not be enough evidence to suggest that we get that push. But with 450 max pain, with the idea of a hook where you have a parallel action moving up, the concept of this kind of mirroring outward where you've kind of entered a new bottom, the similarity in the robust kind of movements on both the RSI and the MACD to kind of flush us up and down, up and down, up and down, the ascending almost head and shoulder like action, which by the way had a 430 target. We already hit that. All of those things have been kind of satisfied. And then in addition to that, you have what seems to me to be a pretty clear divergence up to about 30 minutes for both RSI and MACD in both of these areas. So what that would suggest to me is that you're probably going to get a pretty decent move to the upside back to about 481, which is still like a 20% move. That's nothing to like stick your nose up at. It might not seem like enough. But then the rest of this is kind of interesting. So I went through and I looked and I said, well, what about this trend, right? Because like if this trend exists, maybe it means something. And so what I did is I went from, as you can see, I anchored from the bottom to the top. And then you can see we're entering into that same trend bottom right now. Now, ultimately, you might say, well, that trend broke down. Well, yeah, it did, but it was heavily respected during this breakdown period. You can see the many wicks to that trend. Maybe a trajectory if you want to call it that, but it was a trend at one point until it broke later. We're now revisiting again the same marker in this kind of symmetrical pattern. So what would that suggest to me? Well, if you're going in reverse and you're looking at symmetry, it might suggest that that move is kind of like a head and shoulder, right? Where you've got kind of a bounce in and then a bounce out, although it's asymmetrical. This is much higher, but it would be setting that up along this. If that's the case, the rest of this would be like should be thought of as like a complex head and shoulder, right? Because if the rest of this pattern played out this way, you might expect something similar to happen here. Now that would suggest that I'm wrong and it actually goes way higher maybe. I still think that the way it's setting up makes more sense. It's 481, but you would expect there to be kind of another outward motion on this head and shoulder, perhaps bouncing outward, just like we did here, although again, it's a bit asymmetrical. And this one's tilting down, whereas this one was more upward. Also interesting to note, that parallel, that blue line that you see right here, which runs from now this bottom to this bottom, if you drop it, if you copy and paste it as a parallel, you can see that this is actually the same upward angle as this hook line was, right? Where you have that head and shoulder mark, drops down and then comes back up in a hook. It's the exact same angle that we see here. This is just a copied and pasted version. You guys are like, no, it's not. Look. Well, I thought it was a copy and pasted version. I must have drawn it out. But it's the same marker. So I don't know how I moved it, but I moved it. It's the same line. So it's ascending at the same angle. And this would suggest to me that it's likely that even during this push up, even though I have it at a $4.80, that we might see it go ahead and fill that gap up to 490. And that's where the gap level is, way up here. And I think that that makes sense because you could see like an up thrust here that pushed you up to 490. And then you would sort of start turning back downward. Now, the rest of this, I think, is fairly self-explanatory. If you've got a downward trend, we do, and that's these parallels, it's probably going to follow it much the same way this did. I don't think our expectation should be that it would necessarily hold above the blue. This didn't hold above the blue. And frankly, with the way this is set up, this sets up more like a distribution because it's already made a new low. We might even expect there to be an additional low. Well, that's where this whole 854 comes in. If you go and you look at where this kind of lowest possible trend here, right? This is the last two touch points before we took off. If you look at where that's at, this of course goes all the way back to it, right? We know that. So if it's mirroring outward and this were to go all the way back to that yellow trend, which is kind of the next thing, right? Then you would expect it to come down here. And if you look at where it intersects on the FOMC week, right on that Tuesday 11th place would be right there around 363. And that's essentially like the previous top here. And that makes a lot of sense to me because in some ways that would be like a really smart place for us to land going into the next Fed meeting. So while I'm not like 100% sure about any of this, I never would say that, it seems to be lining up pretty well. So I'm seeing like a likely reversal here that leads to kind of a bleed down, probably going into FOMC, some sideways downward action. Maybe the way I've drawn it might happen like a widening or something where you see the spread start widening out. We would be bouncing around between 470 and 630. And then at that point, I think when the Fed meeting happens, one of two things occur. You get either a run up, in which case I do think it'd probably be a pretty significant move. I'm not expecting it to go to the moon just yet, but I do think that this top parallel is going to be tested. So if you get a run up, I think it's going to go all the way up around FOMC to like maybe 660. And I want to say that that's probably about the top at this time. Okay. If on the other hand, it goes down, then it's pretty easy to see that I think at that point you're looking at this as like kind of a massive, almost like a massive shallow S-curve really. And then you would see it kind of break down. You can sort of see that M cross happen. You see it break down at FOMC perhaps, and that's where you might go ahead and do the full-on retracement back to 291 and then perhaps lower. And this is where I think it's kind of interesting because if you look at where those creeks are, even though I know like on the big picture, you might say that this is like a ridiculously bad thing. Really those creeks are low, but they don't ultimately necessarily go beyond the previous bottom. It's essentially like a full-on throwback. And the interesting thing about that is this head and shoulder structure, again, it might look kind of devious, like, oh, well, crap, we're definitely going really low now, you know. I don't necessarily think that's the case. I think there's a decent case that something like this happens, but once you get down there, if it's a full-on throwback, A, it's kind of like a double bottom. It can act that way. B, if you've checked the creek, you're now outside that creek that we were in before. And then C, like, I really think on the macro, this is kind of like a really good setup still. So even with that push up, it's like an SOS with a throwback or a backup to the creek. It's a full-on retracement. Yeah, that stinks. But even if that were to happen, you're basically kind of like resetting and you might have like a round two again. And I think that's a really positive thing overall. I know most folks are going to look at this and say, well, none of that looks positive to me. This all looks like crap. I don't want it to do that. I want it to just kind of move and go. But I actually think that this makes a lot of sense. And if we were to get a similar move and it did somehow break above here and we were to get a similar style move, I think that's when we're going to expect to see maybe a move really high. And I don't think I've copied this one. So I think it's different. Yeah. I think we might get that really high move finally up to near 18 or 20. And that's where you've got the macro creek, like the big one, right? And that seems like a possibility to me, although I wouldn't go so far to say it's definitely going to happen right now. I think it's possible that that could take some time. And I've been talking a lot about October and some other things on the stream. October 7th as an important date. I'm not ready to go there yet. All of this is kind of speculation going into the next Fed meeting, but I think this to me makes a lot of sense. Based on what we're seeing, it could be really, really powerful. Now, what if this is just what if you're wrong and this is just like a shallow S-curve, like a bigger version of, one of these smaller guys? Well, even if it was, you'd still have to see this kind of push up. And in my opinion, I don't think you would see it take off until it kind of finds support right here. And I think there's still room for that to happen. And we could still see that move earlier than later, but we'd have to wait and see what happens if it came back down. It would need to then make a higher low. Basically have to retest the floor at 420 or 430 and then take off. At that point, we would have probably already passed, 2 or 3 or 4 days into next week. So it's not here yet. I do think that's a possibility. And then you could see a higher push to like 7s as opposed to later on. That leaves a lot more questions about FOMC and stuff. But this to me makes a lot of sense in terms of symmetry. I believe the timing of it is also fairly accurate. So if you go back to this push here and you look at where the peak is, you can see that it's timed out like basically perfectly to get you into a head and shoulder action into FOMC. The question isn't really, for me, it's not really whether it's going to happen. I feel like it already is happening. I think it's evident. But it's more like, where will you be? Like, if that shoulder completes and it's stronger, will you be higher up? Will you be up here at 450 or will you be down here at 370? And I think right now I'm leaning towards that 370. I think we're going to go low and head low down here. It isn't impossible, and it's important to note also, because we're talking about all these scenarios, it isn't impossible either that this goes ahead and does the drop early into FOMC, and that's part of this kind of bounding motion. The only reason I'm leaning against that is because it seems as though this particular motion to get to the blue line is probably the most important right now. The only other thing I can say, and then going again to the yellow, the only other thing I can say is, because those are the ones that I'm looking at as a fan, the only other thing I can suggest is that perhaps it has something to do with this, whether or not this holds. This is another parallel, and that could be over here. And if it broke down at that point, yellow doesn't really matter. So it doesn't recover, and then you end up breaking down to the previous bottom and then maybe going and testing that creek. That could be another thing going into FOMC. But I think that head and shoulder motion is working out that way. I think it's designed to be like a giant SOS with a throwback. And maybe we'll hold 854, maybe we'll hold 786. But I'm finding it to be very congruent. Like, it's all sort of mapped out really evenly. It looks pretty nice. And if it pans out that one of these lines holds, this would give me a really strong indication, as you can see like back here, that this is an actual trend, right? And that we might be on a new uptrend for the time being. And you guys are like, well, that seems like crazy, but it is what it is. And if we're in a giant uptrend like that, who knows? We might see something pretty awesome with the next move, The best way to kind of go about this is probably look at it big picture, and I'm looking at a 15-minute chart, so I'm kind of dragging it around. I'm not going to go into anything else big picture today. Just wanted to do the AMC thing really quick, and I'm going to leave you guys to it. I hope you have a great day. Tomorrow, if you're not able to tune in at all, I'm probably not going to be on very much tomorrow, maybe just the morning. Yeah, it looks like an old parallel back here. Maybe. Hard to say. I don't know if I would argue it's there or like a little lower, maybe like here. It definitely looks like a trajectory, but I won't go so far to say it's definitely like a trend. unless we see it push back up to that top. So, I mean, it looks good. I don't know. That's pretty tight right there on that breakdown. This is a weird time to be looking back, but it might be the case. So, anyways, that's all I got for you. I hope you guys have a good one, and I will talk to you later.